Today, we're talking about Bitcoin, but probably not in the way you're used to hearing about it. This isn't a story about price swings. It's about its quiet, steady integration into the global financial system. This is the integration story.
Bitcoin. Yeah, the headlines are buzzing again, but this time, the story's different. It isn't just about hype or memes anymore. Something really fundamental has shifted in how this asset actually works inside the global economy.
Okay, so here's how we're going to break it down. We'll look at this in 4 parts. First, we'll cover Bitcoin's new reality. Then we'll get into the ETF bridge, super important. After that, we'll see how regulation is building trust. And finally, we'll look at what this all means for this new phase in finance.
So, let's start with Bitcoin's new reality. The biggest point here, really, is that Bitcoin isn't off in its own little world anymore. Its movements are now deeply tied to what's happening in the broader economy.
In the past, Bitcoin's price was all about retail investor sentiment, what was trending on social media, pure hype. But now, it's a completely different ballgame. It's moved by the very same things that move stocks and bonds, central bank decisions, and the steady, serious flow of institutional money.
This quote just nails it perfectly. Bitcoin is shifting gears. It's going from being a purely speculative bet to a macro asset. And what that means is its value is tied to big economic trends, just like traditional assets.
Let's look at a really clear example of this. Interest rates. When rates are super low, investors are hungry for returns, so they pile into riskier assets like Bitcoin. Makes sense. But when central banks start hiking rates to fight inflation, suddenly, just holding cash looks pretty good. Investors get pickier, and assets like Bitcoin slow down. Now, this isn't a sign of weakness. It's a sign that it's maturing and reacting to global financial conditions.
So, if Bitcoin is now playing in the big leagues, how are the largest financial institutions even getting in on the action? Well, that's where ETFs just completely flip the script.
All right, part 2. Let's talk about that bridge, the ETF bridge. This is all about how institutional money, the big money, finally found a regulated, easy way into the Bitcoin market.
For years, this was the million-dollar question, right? How can major players like pension funds or huge asset managers safely and legally invest in Bitcoin? I mean, they couldn't just use the same crypto exchanges we all know. No way. They needed something way more structured.
And the solution was spot Bitcoin ETFs. You can think of them as just traditional investment funds that hold real Bitcoin. And if you look at this chart, you can see this isn't about those crazy speculative spikes. What we're seeing here are consistent, structured inflows from big portfolios and even retirement funds. This is slower, more deliberate capital.
So why are ETFs such a game changer? Well, they provide a regulated and, maybe most importantly, familiar way for serious capital to get involved. They let retirement funds join in, they make things more transparent, and over the long haul, they help create a more structured and less volatile market.
But for these big institutions to really commit, they need to know the whole system is built on a solid legal foundation. And that right there is where regulation becomes the final, absolutely crucial piece of this puzzle.
Which brings us to our third section, regulation. Now, instead of seeing that word as a threat, we really have to understand it as the foundation that's required for Bitcoin to become a truly mature, respected asset.
And this isn't just happening in one place. As you can see from this timeline, major financial hubs, from the US to the UK to Canada, are all working on building clear regulatory frameworks. It's a coordinated effort, and it's basically a global signal that digital assets are being accepted as a legitimate part of the financial system.
Let's be really clear about what we mean by regulation here. This isn't about controlling the price. Not at all. It's about creating a system of rules to cut down on fraud, to set clear standards for how assets are held, and ultimately, to give those big institutions the confidence they need to participate safely. It's all about building trust.
Okay, so let's tie all of this together in our final section, this new financial phase. This is the moment where the world of digital assets and the world of traditional finance finally start to merge.
So here it is, the integration formula, laid out in 3 simple steps. First, Bitcoin is now connected to the macroeconomy. Second, ETFs act as a safe bridge for institutional money to cross. And third, a regulatory foundation is being laid to build trust and set clear rules. You see, each step builds on the one before it.
So the real takeaway here is that the Bitcoin story today is not about getting rich quick. It's about something much more profound. It's about the methodical, long-term integration of a new kind of asset into the global financial system, a system that's being built on structure and on trust.
And all of this leaves us with a really fascinating question for the future. As this integration gets deeper, what happens when the old financial world and the new digital one don't just overlap, but truly fully connect?